What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, we are going to be looking at last week's charts, specifically on Wednesday, and we're going to be covering a specific setup called the 333 trade. Okay. Stacey sometimes calls this the 33 trade. I like to call it the 333 trade just to get more specific. All right. Now, Stacey says that if you're having trouble with understanding the 3-day setup day counts, just look at Wednesday and Friday. All right. And so that's what I'm doing with this video. And in the Discord, we've created a new channel dedicated to the 333 setup. And we're going to be focusing on that for at least a few weeks. All right. That means we're only going to be looking at Wednesdays and Fridays. And the reason for this is because Wednesdays and Fridays are always day 3 of the static weekly day count. So you don't even have to worry about 3-day setup day counts. You don't have to worry about signal days. Okay. All you have to know is that Wednesday is day 3 and Friday is day 3. All right. This setup is the very first setup that I learned and I mastered from Stacey Burke. Okay. Because it's just that simple. The name itself, 333, tells you everything that you need to know about the setup. Okay. So the 333 is a day 3, session 3, hour 3. All right. It's a 10 a.m. club type of trade. Now, I will tell you, I have done some extensive back testing on this setup myself, but you should not take my word for it. You should always do your own back testing. Go back on your charts. Go look at Wednesdays and Fridays after this video and try to find these 333 setups. All right. But what I will tell you from my back testing and from my personal trading, okay, is that this setup is very consistent. And what I mean by that is when all of the criteria is met for this setup, it's a high probability trade. Okay. You understand what I'm saying? Now, something else that you have to understand is that Stacey's system is built just as much or even more so to keep you out of the market than it is to get you into the market. All right. It's a very specific way of filtering out potential opportunities and taking only the best trades possible. Okay. We want to trade when the odds are stacked in our favor. We're not going to be trading every day. If you're taking ACB setups and you are sizing in, it only takes one of these trades every few weeks to significantly compound your account. Okay. If you're getting in with size because you understand exactly what you're looking for. And that's what I'm going to show you with these charts here. Okay. So let's get right into it. Here we're looking at the DJ30 from last week. All right. Now remember the 333 trade, day 3, session 3, hour 3. What that means is Wednesday or Friday, New York session after 10 o'clock. Okay. That's as simple as it gets. Now, one other thing I will tell you, right? This is a reversal setup and we want to take this trade from a market that is in breakout. Okay. So we need a daily level triggered. Okay. So you can see here, right? Monday, Tuesday, Wednesday is day 3. When we zoom in, you can see that right here around the 9:30 open, we have triggered daily time frame traders into this market as soon as we break the previous day's low, which is that red horizontal line. All right. You can see we have this W pattern here at the low of the day. This is a peak formation. All right. If you look here, you can see the times that we're at. 10 a.m. is right here. So we are past 10 a.m. All right. We've sat on our hands from 9:30 open all the way past 10 a.m. to make sure we get this proper entry. All right. Now you can see this is a 1-minute chart, right? But we've engulfed down here at the bottom, right? We've pumped back or dumped back down into the low of the day level. Okay. Engulfed. We're closing above that EMA. We're getting in the market right here. Okay. A more conservative entry would be at the break of this middle structure of the W, and that's just fine. But this is the ideal entry here. As soon as we get that engulfment, we have convincing closes above that 20 period moving average. We're in this trade. Okay. It's a day 3. Okay. Wednesday is day 3. This market has broken a daily level, triggered higher time frame traders into this market, right? Which means that this market is now potentially being driven by higher time frame traders. In other words, ACB, it ain't coming back. Okay. It's going straight to the other side of the range, which is up here. Okay. You're in there and you're holding it until we hit the other side of the range. You can hold until the close of the day, right? But if we've already come up here, we've popped out, hit that opposite side of the daily range, and you're in there with size, bro. If you're in there with size on the DJ30, bro, you're making a lot of money. All right. Just shut it down, be done for the day. Here we're looking at gold. You can see we have 1, 2, 3 days of breakout traders short in this market. Wednesday is always day 3. We're in breakout. We broke out in the Tokyo session. All right. So when we come to the New York session, we're not necessarily in breakout, which might be ideal. Okay. If we're trading below the previous day's low, but this market has triggered higher time frame traders in this market in the Tokyo session. All right. And now you can see here, as we come into this session, we have dumped down. We've taken out this level, trading back into the previous day's low of the day level. This is sort of a classic liquidity sweep when we come down here and take out these lows over here. Same thing as DJ30. Okay. We're after 10 a.m. You can see where I've marked off 10:15. We've dumped down, swept that liquidity to the left. Big engulfing candles. We're closing above that 20 period moving average. You're in the market. Stop losses at the low of the day, targeting the opposite side of the daily range. All right. And if you're sizing in on gold, this is a massive win. Okay. All you need is one of these trades every few weeks to compound your account. So stop going to your charts and trying to trade every single day. You can make it very simple. Wednesdays and Fridays, a market that has broken out and triggered higher time frame traders. New York session, 10 a.m., reversal, bam. Okay. You hit it and quit it. Here is the Canadian dollar, Swiss franc currency pair. All right. Monday, Tuesday, Wednesday is day 3. You can see Wednesday has broken Tuesday's high in the New York session and reversed all the way to the close of the day. All right. When we zoom in here, you can see clearly, here's our breakout of the previous day's high. We have higher time frame traders triggered into this market. It then begins to dump down. This red line is our 10 a.m. third hour. Okay. We're coiling sideways into that EMA, pumping up into that EMA, dumping. Okay. You can enter anywhere here in this coil as we're pumping back into that EMA, entering stop losses up here at the structural highs of these pullbacks or even at the high of the day. And you're targeting the opposite side of the range or holding until the close of the day. All right. But oftentimes for me, if I see one big push, 2 big pushes, 3 big pushes, this is sort of like a capitulation, right? And you can see this was as low as we went that day, and then we start coiling sideways. Just take the money and run, bro. Okay. There will always be another opportunity. Just get used to taking profits for yourself. All right. And here we're looking at the US dollar, Canadian dollar, Monday, Tuesday, Wednesday, day 3. We've broken Tuesday's high in the New York session and reversed all the way to the close of the day. Okay. So again, here's our 10 a.m. timing. All right. We've broken out of the previous day's high, triggering daily time frame traders into this market. We have this micro M pattern up here at the high of the day. We're closing below the 20 period moving average. We've broken the middle structure of that M at the high of the day. You're getting in this market, sizing in, okay? Stop loss at the high of the day, targeting the opposite side of the range. And you can see it goes down very quickly with momentum, with force, and takes out the opposite side of the range. The reason why that's happening is because we have daily time frame traders triggered into this market. That this trade is being driven by higher time frame traders, daily time frame traders. So we break one side of the daily range and then fall immediately with ferocity down to the opposite side of the daily range. This is the 333 trade. Okay. It's a wonderful setup. It's the easiest one to recognize, in my own personal opinion. And you don't need to worry about day counts, signal days, none of that. Okay. It's a very simple setup. Get used to it. Okay. Go on your charts, do your homework. All right. Check out Wednesdays, check out Fridays, look at what happens in that 10 o'clock hour. All right. And that's going to do it for this video. I appreciate you guys being here. If this video generates questions, causes you confusion, just drop me a comment down here and I will get back to you as soon as I can. You can also join the Discord group, send me a private friend request, and we can go over this, okay? We can go over it one-on-one and we can get you up to speed. But this is, in my opinion, one of the most simple setups you can start mastering today, okay? This setup, back in the day when I was first getting started with this was the only one that I was trading. And that, I added on different setups later on, right? I was working on mastering them. But once I mastered this setup and I was trading it only, that was my most consistent trading period ever. Okay. So, like I said, we're focusing on this in the Discord. There's a dedicated server channel there to the 333 trade. You can see some custom slides that I made that I put in there to simplify this even more for you. Okay. But I appreciate you guys being here. And until next time, I hope you continue to free your mind.